Good evening. This is the Elliott wave update for the NASDAQ 100, the S&P 500, and tonight I'm including the 30-year bond and the 10-year note. Starting here with the equities, let's look at the NASDAQ. There are not a lot of changes. The market did put in a little bit more convincing move today, convincing in the way that it was supportive of the current labeling and continues to suggest that we're likely going to be finishing up above last week's highs, which here in the NASDAQ is right 12,949, 12,950. So I would suspect that we are going to get above that, start getting up into these levels. So let me just go into the count and then also the Fibonacci, and I'm going to fill in the blanks to where we are within this last leg up. As you can see, simply just by the count, that we're within that last leg. So I believe that we're very close to reaching and according to this, it would be, we're still working on the counter trend off of the October 2022 lows. So that's the move we're finishing. So basically about 4 months, maybe 5. So the next line down should be of equal duration, one would think. In any case, at least a month or two. Let's take a look at where we are. Here in the NASDAQ, we're in an intermediate B wave that's going up. It's a counter trend. The trend remains down. So on the 4-hour chart, what will be inside of intermediate wave B are 3 waves of minor degree, which will be labeled A, B, and a C. We already have the A and B, as I'm just indicating, and therefore we're in the C wave up, and that'll consist of 5 waves of minute degree. There's 1, 2, 3, 4. We're inside that 5th. So let's drop down. Let's take a look at, and just so that we're clear, these outside, which will shift over, but these outside fibs are for the C wave, and right now it projects to 13,050 as where 1.236 resistance is found, Fibonacci resistance. The next level up is 13,321, and that would be 1.382. 618 does sit just above the high of wave X, so I cannot declare this like no-go zone because it could pop, fail, and drop. The market is reacting to what the market wants to react to, so it doesn't necessarily coincide or coexist with what is being perceived as reality, and that is that the Fed is going to have to continue to hike rates to kind of pull things in even tighter, regardless of what they're doing in particular stocks. So the market has gone off in its own direction with algorithms being more in control. So there's a lot of additional things that continue to play into why we're rallying. Right now, it is a lot of money, a lot of capital being pushed into Tesla for whatever varied reasons, and that puts a lot of premium trade. So the options, the Tesla options, are trading liquid, very liquid, high volume in the stock. So there's a lot of premium. So it pulls a lot of dealers, a lot of market makers, a lot of traders. They're going to come and they're going to focus on Tesla because that's where it's happening right now. And it is spreading to other markets other stocks within the NASDAQ and the S&P. Any case, I'm going to take a look now. So I'm going to drop this down to the 1-hour chart. And on the 1-hour chart, we're basically just looking at what's happening right now. So, but before I do that, I will add, I'm going to go back out to the 4-hour. I'm going to add one more fib. I'm going to open this up a little bit. And now I'm going to put the fib in for minute wave 5, and that's also extensions, and we're going to take it from there. Whoops. Except that's not the one I want. So let's just try that again. There you go. 2 there, 2 there. Okay, so now we're looking at wave 5. And that's current where we are. We're going to drop down to the 1-hour chart, and here we are. Within this minute wave 5, we're going to have 5 waves of sub-minute degree, of which 1, 2, and as I discussed yesterday, we're inside that third. And here was what I said it needed to do, was to go pretty much just go up and not necessarily stop. We did have a little bit of interruptions this morning on some economic data, which was kind of like swinging, but the market had already made up its mind what it was going to do. So off we went. So all of these orders were basically, that's what the algorithms are going to go hunt for. And that's what they found. So again, 1, 2, and this is a third, and that's a 1, 2, 3, 4, and a 5. We'll deal on with the third. So I'm thinking that we continue to go and likely finish up above 12,950. So that would be the high. And anywhere up in there. Again, this is the larger, the C wave, which will finish that intermediate B. Now we have wave 5, which will finish the minor C. And eventually we're going to stick it back in there. I'm going to kind of add one more, which will give us the third wave within all of this, but I prefer to wait. I mean, and we'll add it at some other point, but honestly, right now, I'm looking at 12,764. It's kind of gotten up towards that area. I believe it can get up, rest, and then break it. And that sends us up to the 382 for the minute 5, and that's at 13,086. I'm going to go one more level. Let's bring it down to the 30, and let's go inside. Let's see if we're looking at that third. We're going to take it again from here to here to here. Might be a little different. I'm going to connect it to the extremes, but I think wave 2 actually was on this bar. So these all extremes get taken off when we're looking at actually way up here probably. So this might be a slight difference. Okay, so wave 3 projects. Here we go. 12,834 is where wave 3 would be equal to wave 1. We're looking for it to get a little bit more. So we could be getting up and start touching 12,900. Then it's going to be longer than wave 1, and then we can complete 3, 4, and a 5. So we continue to have clusters around that 13,000 area for 3, and then also for the whole move. Now, once we get the 1, 2, and the 3, and the 4, then we'll be able to project what a wave 5 will look like. So we'll continue to focus on where this ultimate top should come in. So for right now, we're looking for the completion point of wave 3, 12,834 and above. Doesn't necessarily have to run all the way up in here. It can, but now you're going to start to see that third wave, where it'll be in relationship to the first wave. But I'm also looking at it in relationship to being in a fifth wave or a finishing type move. So there you have that in the NASDAQ. The moving averages continue to favor, and I'm just going to take this off so we can actually see the moving averages. I'm going to back out to the hourly chart so we can take a look. The 200, as I suggested, once we started to rally, it will start to angle, which it is. The 50 is now angling nicely, and everybody's in a row or in alignment for this rally to continue, at least basis the hourly chart. All right, flipping over to the S&P. It's basically the exact same thing, a little bit different because the S&P is a little bit cleaner in the move. So I'm going to go back out. I'm going to start back out on that 4-hour chart, and we'll bring it down. So again, what we're looking at is an intermediate B wave, which will consist of an A, B, C of a minor degree, which is their A and B. So we're inside that C wave. And here we project. We have 4,208, which actually would be a level that is the already existing high, but it remains resistance. So, but we're in that third, which I suspect may break above that level before completing, and then we get a 4 and then a 5 with inside this fifth wave. So we're all the way down. That's the 4-hour. Now taking it down. Well, first on the 4-hour, we continue to wrap around 4,322. Again, I'm preferring that we stay below 4,327. So could be tight, but we'll see. So anyway, I'm looking for all of this to be complete below. Now that's the 4-hour. Let's take it down to the 1-hour, and we'll start filling in this. I always forget. Let me go back to the 4-hour and put that wave 5 measurement in. So open this up a little bit so it'll make my life easy. And we're going to put it in from there to there to there. So again, lining up, we're looking for the completion point for the minute fifth wave. 42.55, 42.67 seems to be fitting pretty nicely. 618 brings us right to that 4,300. 618 and the fifth wave compared to the third, nice, very common. So that would put it in more of the normal expectation versus what we've kind of been seeing lately. But so it fits. Now I'm going to break it off, bring it down off the 4 to the 1, and now let's take a look inside this minute fifth, which you know is going to consist of 5 waves of sub-minute degree, of which I believe we have 1 and 2. And as I was showing before, I am using on this level to show that 1 and 2 the line chart. So again, here we had 1 and then another 2, could have broken, but it did not. So, and now we're starting to head up, and we should get above. I believe we did according to on the other chart. And so we should be now moving up inside that third. Now, if I'm going to keep it to this level, then I would use this for my wave 3. And again, I'm going to use that. So I'm going to go here to here to here, because this was an extreme. And I could push things much higher, and this gives it a little more realistic. So this third wave, see, projects to 42, right around the area of that high. We get wave 3 and a 4 and a 5. And then once we're there, we will be able to add the additional, but we continue to find resistance here on this level for the minute fifth, 40, right here at the 50% level, 42.67. So we're adding them in, 42.90, 43.01. So there's a lot of resistance, and that would all be associated with the minute or the sub-minute 3. But I think it also, once I get up in here, I can get that in and then do a fourth and then a fifth. Then we can run additional. That'll give us more into here. So we'll drop the thirds and we'll put in for the wave 5. So right now, wave 3, 100%, 42.16, 42.40. That's where I think we could kind of top in a third, put in another 4 and a 5. So we're still looking basically at that 4,300 level. And I'm going to be talking that it looks like it should kind of come in sometime Friday, I would think. Monday's a holiday, so I think they might want to get this done before the holiday. We'll see. All right, I'm dumping over. I'm going to go to the 30-year bond. Now, this is, I'm adding to our daily coverage here, basically because I feel that the bonds are back in, well, they've been in play, but they're more headlining, I'm going to say, because of all the news and what's happening and where we think things are. So again, I wanted to just detail a little bit here in the 30-year bond. Now, those of you that do pay attention, or not pay attention, excuse me, that's insulting, that do watch the podcast, my weekly podcast, where I go over the big picture, I do include the 30-year bond. So we are in an intermediate B wave counter trend rally. And right now, the internals of that would be that we would have 3 waves labeled ABC of minor degree, of which so far I've really only been able to put in minor wave A. So within that, then we're in a minor B wave. And as far as bond prices, it's a bond price decrease and a rate moving higher. So that's the nature of the wave pattern, yield versus price. Yield would be the rate, the 30-year bond rate. And so right now that is rising, but we're pulling in very quickly. So let me just kind of go over this picture. We have A and then an A and a B, and I'm looking for a C wave. Again, 4-hour chart. We have already a low at 124.11 that remains important in terms of the short-term picture and maybe how deep this particular internal B wave could go, and how that fits with, because we have some external discussion, talk, rates interest, et cetera, that the Fed will not necessarily come through and start to move rates lower. They may continue to de-accelerate at the rate at which they've been going. So that's always the conversation. But right now, in this bond, A, B, I'm looking for the C wave. So I'm going to bring it down to the 1 hour chart. Now we're looking inside. There's the B wave. C wave is going to be consisting of 5 waves. So of a sub-minute or sub-minute. Yeah, I think I put those incorrect color. I did. Stay with me 1 second because I got to change this. Otherwise, we're going to be off on how we're labeling. So I just have to put them back in the minute. So primary, and then it's going to be minute. So we're going to go back in there, change that, change that, change that, that. Okay. So what I'm going to do is I'm going to go in because I want to look at the C waves. C waves are always 5. So I went down here as well and went over to the line chart so that I could see where did this come in. I am going to put, I think, the A wave or the wave 1 here. And then I have an A, a B, and a C for wave 2. And we're inside that third, which is very dynamic and unfolding quite strongly. So we could be, that could be 3, this could be 4, and now we're in the 5th, which is unfolding very quickly. So there's a couple of interpretations within this C wave down that are acceptable, but the market's going to have to be the ultimate decision maker. So one of the things that's kind of going on is like if we are pulling in and back out to the 4-hour chart, remember C wave down. And if we're inside this B wave and basically it's flat, that puts a lot of pressure on that support level at 124, number 131, and then down to 11, which was the extreme. Now I'm going to go back down and let's take a look at what the fibs, dang it, are telling. I got to go back out to the 4 because what I'm going to do is measure the A down and see what the C projects at. But I keep thinking I can get it all in on the hourly, and I can't. Again, we're using the extensions. So I'm going to go there. Nope, sorry. Let's go one more time. There to there. I like being as accurate as possible up here. And come on, there. So wave C, you can see wave C would be equal to wave A at 125.10. We're almost there. And that would complete it. Trust me, we can complete it there, but we have to give room that it comes down and it equals what we had at 124.11. Then it's absolute flat. But because we went on a little bit above the highs on extremes, I'm going to let it come with the pressure that it can come down to 124.11. A break really doesn't upset the apple cart, but does begin to point. We have 123.16, 123.08 right below. Now, with that in mind, if that completes minor wave B, then again, I am looking for a minor C wave back up to finish the larger B wave. And that's these levels. So the rally to come, if we turn, would be that we come back up to 135 or above. Now, here's the caveat. If this count is going to be showing us that this entire move completed, or even up to here, completed the entire counter trend rally in the bond price, and we're back into a larger decline, I want to tell you what I'm comparing that to. There, I got to go out one more. Wow. There's the first leg down, right? There is intermediate A. If that's all we get for an intermediate B wave, we're going to have another one of these. And you're looking at 6, 7, 8%. No joke. But that's out there. There's no confirmation. There's no nothing to even suggest. It's just there. Technical via Elliott. All right. So Right now, I believe that we probably could be pulling into a bottom, and then we're going to get a C wave, and that'll bring us back above 135, and everything will look rosy again. All right. Now, that's out there. Going to look at the 10-year note. Same thing. 10-year note, I have pulled the A wave out to that high, which was kind of an extreme in the 30-year. I may switch it. I may have to switch it because I think the 10 actually is more in front of, in terms of leading what we are doing in terms of interest rates more cleanly than the 30. The 30 has been a lot more volatile. I'll tell you that intraday. So here on the 10-year note, we have that fifth wave and intermediate wave A. Okay, so on the 4-hour chart, we're in an intermediate B wave. What we've completed is minor A. So we're still in that minor B wave. But guess what? It's pulling into support on the 10-year note. We needed or looked for 618, and that's 111.21. That's the support zone, 111.21, and it likely coincides with 124.11 in the 30-year. Now, if that all hits and on the stars align, whatever we want to call it, then I'm going to be looking for a B wave there, and I'm going to be looking for 5 waves up and a C wave here in the 10-year note. And it has potential to at least get above 116, which is already threatened and tested more than once. Above there, and start heading up. But once this B wave is in, then I can draw the expectations or the parameters for the depth of that possible, or of the C wave heading in the other direction. Right now, we're still inside. Let me drop down to the hourly chart, and I should be able to do this. Yep. Okay. Yes. All right. So I'm going to go back to here. Now I'm going to put in for this C wave. Let's see. And so I'm going to start there. I'm going to go to here. Come on. Come on. Thank you. And go up to there. And a little bit higher, but this one will be okay. So again, if we're looking for 111.21, well, 111.26 or 265, that's also support. We're working on the 5. If I drop it into the line chart, it's been a wild ride and this initial decline. So wave 1 was the extended wave. Wave 3 will be normal. Wave 5 would be normal. So we're pulling in to support, which could again turn the rate back, where the rate goes back towards 3.5, maybe up to 3.25, or down to 3.25. The bond prices, on the other hand, will turn and run and should then break above 115.30, which right now is our existing sequence high that we reached back. Actually, let me go right back out to that 4-hour and I'll make sure I know what I'm talking about here. That high is yes, actually 116, where we still have resistance. So looking for the completion of the C wave, I believe we're coming in, that's going to be the B, and then we run above that and we start heading up towards this, which is 382, and that is for that larger intermediate B wave. So bond price still has a larger C wave down to put in. So yes, interest rates are going to rise, and they'll be very dramatic. Right now, they are appearing to be dramatic, but we've been here. We've been to these levels. We've been lower on bond price, higher on bond yield already. So are we do stand a chance we can go down and test those October levels, both in yield and in bond price? I don't think so on this particular move. I think we're kind of getting into an area where it should hold. We do have additional below that 111.21. We have additional support at 111.10, 111.010, and right down to that 111 basically. All in that same area. And that I would suspect should hold prior to the 10-year turning and heading back. Bond price up, yield down. Now, outside of that, if it continues to break down and then it breaks below this level, then we're going to be putting that intermediate B wave here, and we'd be spelling much trouble. Now, that could happen now as well. So that's why I'm presenting both cases. And if that's the case, you know what's going to happen in the equity markets. It will not have a choice. But at the moment, all of the economic data that's coming out is basically being put on the back burner. But the interest rates, the Treasuries, have to react because they're the closest relative to interest rates, because that's what they're measuring. So they're going to go right with what's happening in the conversation. What those economic indicators are showing us, what they're telling us about inflation, what they're telling us about what the Fed is likely going to do, what the Fed continues to tell us what they're likely going to do. We're getting all the voices out there in terms of Fed governors, one's hawkish, one's dovish, and boom, clash in the middle, and the prices go all over the board. In any case, I do think that the 10-year note, my preferred count is that it's getting ready to put in a near term, like maybe a month or two bottom, and then bond price should rally one more time before the next stronger downtrend resumes in bond price and uptrend in the bond yields. And that's where I'm going to finish it up for tonight. Now, again, what I want to add, just so that we're all aware, tomorrow on Thursday, the economic numbers that we'll be getting are housing starts and permits, jobless claims, Philly Fed, and PPI final demand, and those all come out at 8:30 AM Eastern. All are market movers. So we get the kind of a quadfecta there. And so we'll see, because everything that's been coming out now, it gets an initial reaction and the market just picks up. It's like, oh, this is what we were doing just prior. So equities could go one direction while bonds do react more intensely with what the economic data may be showing us. All right. Have a great evening. Next update will be on Thursday, February the 16th.